What's up, y'all? Good morning. Good morning. Good morning. Giveaway Friday starting really soon. I just sent you guys messages for the last giveaway. Where is Morning. See what's going on here. All right. Quickie, if you guys want some letters, or some levels here. 21,292 is the impact red line from yesterday's selling. So let's put that right here. And on S&P, it is 5946.5. These are going to be resistance targets, basically. If you think the market's selling off and going down, that is a resistance target. 21,292, 61. So we basically hit that retrace. Y'all know those are IRLs, what we call them. What's up? Don't forget to smash the like button. We have a giveaway going on today. So let me turn that on here. We're giving away today's giveaway is 350K end of the day evals. All right, cool. Let's do it. Giveaway is active. Head over to the contest channel. The Discord. Wait, missing end time. Oh, wait, hold on. Ends today at 10:30. Or 10:15. All right, let's go. It's called Smash the like button. Everybody here say hi. Don't forget to say hello. I have a weird feeling about today's market. I'm not trying to short this. I'm not trying to be bearish. But I feel like it might be a bad day again. What are you guys feeling? I always hope it's a good day. But I just feel it might be a bad day. But wait. All right, let's get some hype in chat, guys. Let's go. 4 minutes. The market opens. I don't have my glass today. I'll be squinting a lot. I'm staring at the screen. I think they're downstairs in the car. Who freaking knows? Right up at DD band today, 21,339 is that target. There's going to be a strong pivot right here at the impact red line, which is this guy right here. We are gapping up on futures, which is pretty cool. I really hope we get a reversal in the market. I'm not going to lie. See accumulation range. Yeah, I hope so. We don't do Zoom when we do giveaways, so we get everybody together. So today's another giveaway on ETF. Stacy says there's no feeling of trading. Listen to her. She's right. Eva, you have no feelings. Be a robot. It's about the numbers and numbers only. All right. So today, we're going to take a look at, remember, DD band is usually what I like to trade inside of these bands. Just as a review, on our back test, 88% of days close inside of the bands. 4% of days break out to the upside. 8% of days close on the downside. So usually my long trades end at the band. My short trades end at the band. If the CD ratio comes out being greater than half, I don't short off of this band. If it's less than half, I do. So I don't take the 88% short unless the stocks themselves are bearish. We'll get that ratio right when the market opens. Down here, I always buy this dip. I'm looking for that. So let's see if there's anything going on in the news today. Always check your news in the morning. I don't think there's anything going on that's important, but let's see what's on the calendar. Always double check it out your economic calendar every morning. Make sure there's nothing in the way of your awesome trade plan. So today we have ISM in 30 minutes. So that's going to be a pretty decent move. So you have a catalyst coming up that's going to yank the market around. Just keep your eyes open on that. S&P levels, very similar boat. The S&P level 5646 is the IRL on this move. This is that last little catalyst move we have. This is the imbalance point. There, 5646 is a high volume pivot when you touch it. You see how we're accumulating volume right here. This is one of our tricks, one of the 20 courses we teach in the 20 days masterclass. So impact red line, it has to do with the imbalance on this particular catalytic move that we had yesterday. You guys remember catalyst was active. So as soon as this happened, I sat out all day and I didn't do anything. You guys know the drill and how I trade. Market up in 1 minute. It's going to wait on this one. See what we get. We held monthly hedge pressure overnight in S&P, which is pretty decent. Actually, no, I'm sorry. We broke through and held it, which is good. That is good for the greater market. 59.25 is a make or break point for the greater bear market to unfold over the next 3 weeks. Monthly maps are showing weakness in the markets. Just be careful. But it is showing only about 3 or 4 days of weakness on the, I think it was NASDAQ. So NASDAQ is actually going pretty strong. Stocks like Amazon, Nvidia are holding the fort. So you have some pretty decent amount of market cap that's keeping the market floating. But not all the stocks, unfortunately. Just a couple. Sector tracker, front and center. Make sure we're paying attention to this. Okay, quickie little dip at the open. Let's see if we're going to rally today. Resiliences are positive, which is good. That's a decent setup. This impact is going to be a really strong resistance point. See if the market decides to break it or not. See how I calculated that? 59.46. We do teach a class on how to calculate this exact number. It's going to be really strong resistance. If you break it, it's a really strong blast point, which is good. Good for the market. Let's get our liquidity maps front and center. See what we end up getting on this. Okay, let's get rid of this catalyst line here. S&P gap and go resilience is positive. So looking at this one, this is great. It looks like we got bull setups today, guys. Here, DD band is a setup. We have bounce points here and bounce points here. So I'd like to see some dips to buy on, or at least bouncing on the open to buy on that. Let's see if we get anything good here. All right, S&P is good on a bull long down. This is a bullish liquidity map. I like that. Nasdaq is pretty good too. Let me make sure I get my... All right, Nasdaq is at the DD band right now. This is actually the end of the long bull run here. This guy right here, that's actually the end of the day. Usually for me, I don't usually trade outside of that band. So Nasdaq is poking its DD band right now. So, unfortunately, I don't usually. That's yesterday's map. The new maps, are they coming in yet? Oh, so new maps aren't in yet. Hold on. Oh, they're coming in now. Okay. Let's get the refresh. So, yeah, sorry. There we go. There's the refresh. All right, so bull long down. S&P is at the kind of like the upper band. This is usually a limit for the day. Unfortunately, days like this, I don't get a lot of trading activity because I don't trade outside of these bands. The S&P's is about right here. And that's it. QQ's around on the edge. So the setups here are bull zone to here. On the break goes to here on positive resilience, which we are very positive there, which is good. Nasdaq's looking weak. And so it's good. Nice bull setups. Like it. Across the board, pretty good. At this band is usually the end of the bull move, so I don't usually trade right up against here. I'd like to see it try to sell off, and I'm going to get some good pivots to long off of. So, guys, like right here on the edge. Ratio is nice and strong, 83. Bull market could be back. I like it. I don't hate it. The question is, what am I going to do? Welcome to the stream, guys. What do y'all think? How are you feeling this market right now? One thing is that I don't short off of the upper part of these bands unless this ratio is bearish, and this ratio is nice and strong and bullish. So what I normally do, I know it sounds kind of sucky, but I normally don't do anything but long above those bands unless I find a good strong long pivot. Outside the bands, I usually sit out. No, it's the unsexy thing to say, but I usually always sit out, unless sit out on shorts. So I don't take any shorts up here, but 88% of days will close back below these bands. I don't short bull markets. So nice strong bull market. I don't short. I only short when DD is less than half. So check out IWM. Looks like the IWM today. So what I normally don't do is chase long breakouts up there because you don't know how far the market's going to sell if it does reverse back in, or how high it's going to go up if it does tuck back in. So normally I try to get long pivots to go. IWM is great. There's a really strong setup from here to here. IWM is actually a nice bull setup to go. I'm curious if we want to take that one today. R2Y. This is actually a pretty good setup on MHP break. I don't hate it. So that's really good. That's actually a really good setup. So a lot of times when you move that far in the open, there's not really much to do. So today, here's some good setups that I'm looking for. So QQQ in general, I usually avoid, I avoid this because I don't have any strong bull pivots to trade off of up here. I avoid here. If the market dips in, there's a pivot from here to here. There's a pivot from here to here. So nice, good bull dips inside of here. I don't trade outside of the band. So I don't chase the gap and go when it goes beyond a DD band. So that's usually what I don't do. Coming back, what's up? Too much bull. I need to get my glasses. I'm squinting. I think I left them in the car, but we'll be right back. So let me draw some setups here that I think are looking good. QQQ dipping down the bull zone is looking all right. As long as this ratio is good, SPY is looking all right. Here to here is a really strong pivot on res greater than 0. You have 90% of days will close above the bull side as well. Looks pretty good there. Okay, so today I'm waiting for dips to long back off of. Not chasing long at the high though. I'll be right back. Blind. All right. That's better. I can see. And I'm out of breath. Oh. IWM's the good one today. Oh, yeah. So I want to take it. Ugh. Nice, good, strong day. Strong day today. Run up 3 flight stairs. Oh shit, nice little bump there. Is this the big bull reversal day that we were looking for? Let's take a look at monthly maps today. No trace for me yet. All right, let's take a look. Months are all over the place. Okay, let's analyze the monthly maps. So as you see, right, it is all over the place jumbled. Let's take a look at this. There's still resistance on S&P and everything right up in here. So it's not really strong and bull in the clear just yet. There's still volatility, which is the space between these two. So volatile, kind of topping pattern. Still no breakout. Kind of long potential there, unfortunately. So whenever you see the top of the bear zone like this and the bottom of the bull zone like this is kind of like a ranged area. Upside movement can go all the way up to maybe like 594, 595 over the next week. We don't really get a return to bullishness until January the 17th. So be careful today that this little pop doesn't turn around and drop. The market still has volatility. That's called a volatility pocket. So it's gonna be hard to trust moves. So be very careful in your trading, guys. Nasdaq is in a similar boat here. Nasdaq is all bear zone. This is not looking good. This is worse than it was before. Practically no bull zone in Nasdaq right now. So nice little pop today is a short squeeze, which is all you can see on the map here. A little bit of short squeezing there. So this is looking at future options in the structure of the market. I wouldn't be surprised if the market turned around today and started selling. Nothing really bullish about this. As a matter of fact, this is extremely bearish up until the first week or two. We're straight up bear zone. Bear zone is strengthening. Not the best at all. I fear there's a bull trap building right here. All right, so S&P's DD band is exactly right here. So this is the end of the bull run if I were to take it. Be very careful today, traders. This isn't investment advice. Just as the stats go for what we have here, is that on this upper band, only 4% of days break and go, 96% of days tuck back in. I don't do any shorting. I just don't trade up here. I don't short a bull run. I like to watch bull markets manifest. One of the members said if you go outside the bands and don't hold it, it goes to lower DD band. A third of days will do that. So 1 out of 3 days that pierce the upper band and fail, if they pierce and fail, a third of days reverse to the other band. It's actually that it's a pretty decent stat. You don't bet that happens, but the potential is there for risk. So longing outside of the band, the reason I don't, I'm very careful about taking trades up here is because the potential for loss is big. So usually days like this that move, there's not really a good setup for me. Nasdaq resilience is right on the edge, 0 as well. So remember, Nasdaq was kind of the grosser looking of the two. And Nasdaq has a run length red line at 21,405, which is about right there. And we had an impact right here. So these are some of the pivots that we had for Nasdaq. I honestly, my spidey sense is telling me to be very careful about this market. Nobody wants a bull market better than me, though. Let's keep an eye out on Nasdaq today. Yeah. I think you're trying to move again. Finally, one of the stocks push over the other edge there. Let's see if it's Apple. Who's moving today? It was Apple. All right. So now that Apple's moving through the redistribution zone, resilience got a nice little bump there. So Apple's a big part of this. We'll see what Apple ends up doing. So Apple does have support here to there. And that's the move I like to look at. If Apple gets a good break from here, then market's going to move pretty quick. So this is good and strong. This is good. This is strong for the bull case today. Definitely. Still though, I'm going to tell you guys, I've been doing this long enough. I don't chase these kind of moves. Even if the market does turn around and rally, you guys know me. I only need 10 or 15 points to make 5 or 10 grand. I don't need a lot of move. But this kind of move is not a move I like to trust. I'll be very careful. ES is at the upper DD band. What I like to do is watch. Let a bull market play out, and I like to watch it. So we'll see if we get it. It's pretty strong today, though. I wouldn't try to fight it too much. Now, one rule I do have as well is if the ratio here is greater than half, I don't actually short this, even though 96% of days will stay below that band. Remember, it's 88 in the middle, 8 below. So 96 days don't break out and go. It's only 4% of days that do. So what I don't do is I don't short that it comes back in. But I avoid chasing along outside of these bands. If you guys know, our DD band calculation is right here inside of the actual platform. You click this tab right here, ES, gives you the numbers. That's a break point. It's a high volume pivot. Right here is the high volume node. You cannot make this up. There's your high volume node. There's the pivot. And there's the pivot. Guys, I mean, like I tell you, fucking sub to the channel, guys. You learn something from me. Stats. No. I didn't do anything. I ain't doing shit. You kidding me, man? I ain't doing a damn thing. What I say about this fucking market? What I say? Huh? Stats is stats, man. What I tell you? What I say? Hit that like button. 1 out of 5, you did it. Hit that like button, guys. Come on. What I tell you? I don't chase that. I don't chase those longs. Goofy stuff. Goofy stuff. It's goofy trading up there. 4% of days. Break and go. Don't say thanks. I don't short there. I just let it fall. I don't do anything there. I have no reason to risk getting my capital. Nothing. Ladies and gentlemen, look. Predictable high volume pivot, 96%. Listen, guys, listen. Listen, you come here for a reason. I got exact on the penny. I mean, the algorithm gives you the number. There's right there. There it is. Guys, let's just be real here. Resilience is now less than 0. This guy wants to go to there. Could break MHP. Resilience can predict hedge pressure breaks in the middle redistribution zone. Resilience can smash to MHP. And today can crash. Today can crash. Today can crash. Be very fucking careful. Resilience is a gap fill predictor. If the S&P fills its gap and it breaks MHP, today can crash. Be very careful. I'm not betting on it. We can sit out and watch the events unfold like a brilliant trader should. Resilience predicts hedge pressure break. Resilience predicts hedge pressure break. Let me repeat it one more time. Resilience predicts hedge pressure break. And that's set up. You know, MHP in the way. Careful. Today is. Be careful today. You guys, we teach a class called Resilience Can Predict Hedge Pressure Break. The gap fill is one of the most important pieces of this. Now, I'm not saying it will. I'm not saying that it will. Please. It's just a caution. So I'm not longing here. Number one, resilience is a gap fill predictor. S&P wants to do this. If this number is less than 0, this is a caution. Res less than 0. Okay. Just a caution. Doesn't mean it's going to. It's just a caution. Okay. If this happens, this is a stronger pivot than this, than the hedge pressures. So if this happens, it has to break through a gamma maximum on monthlies. Anytime you squeeze monthlies, it's nasty. We have a rule that if you break monthly, you do not. Again, you guys do whatever you want. It's not investment advice. But the rule is, if monthly is broken, blue weeklies are not strong support. So if monthly's broken, it just plows through blue like it's not even there. Like, not even there. Okay? Not even there. Plow through. Plow through. Okay. I'm going to leave this on the screen. You guys, somebody screenshot this. Keep this, and I'm going to show you that this is 5 steps ahead. Okay. Number 1, from here, I did 4% outside of band, 88% inside of band, or sorry, 96% inside of band. Resilience is less than 0. I'm saying it can crash today. Tell me that I'm fucking right. I'm 10 fucking steps ahead of the market. Res predicts hedge pressure break, and if Res hits monthly, this market will collapse today. I'm talking about collapse. Be very, 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 very careful today. Traders, I'm not giving you investment advice. Be careful today with whatever it is you decide to do. Okay? I'm not saying it's going to do it. I'm saying I'd like to see it happen because this is not a safe long for me. So, again, we're not professional guessers on the market here. Okay, I'm not going to bet on a crash. I'm not going to forecast a crash. What I am going to do is be very cautious on my long trades if I get them. So, I'm going to be very careful trading this environment. This is a warning sign for today. Let me get it all. Let me get a picture for the Twitter. The Twitter kids love it. Let's hope there's no crash today. Days like this are great. What I like about this is who here? All right, let's just hit that like button really quick. Y'all tell me one thing. Tell me one thing. Right here, wasn't it here when I go, oh no? Tell me, wasn't it there at the top when I go, oh no? Oh no. This is bad. This is very bad. Very bad. Literally at the top. Very bad. Very bad. The market can crash today, guys. So let me tell you, when I tell you, one of the things that we do here is sniff out these events. I'm saying it will. And if I miss out on a bull run, who cares? I made a fucking fortune this week. Yeah, I did all right. I did terrible this week. I did good. Don't let me kid you. I did pretty good this week. I don't need to make every trade, but here's what I'm going to say. The one thing I do that I think I do well is sniff out crashes before they happen. This is a domino effect, and I'm not saying it's going to, and I'm not betting on it either, because I don't bet against bull markets if they manifest. If I think it's going to crash, what I do is I sit out and watch everybody freak out over the pandemonium, and I sit here and drink my coffee in peace. Matt's over here with balls of steel. Half you guys and girls are wanting to take it. One thing I don't do is short a bull break, though. So the problem is that the bull break is pretty strong. The desire to fill the gap is pretty weak. So the market's kind of torn between a couple of different things right now. Now, the problem is that resilience is usually never wrong. The index tracks the stocks, and this is an indicator that says the majority of stocks are pushing this way. As a matter of fact, if the resilience moving down like that means Apple just took a nosedive. Okay, not nosedive, but it fell off. So Apple did not gap and go, and Apple's at support right now. If Apple loses hedge pressure, then we're going to get some downward movement in Apple. So what looks like a calm day today is on the verge of crashing. If Apple just loses this much right here, the Nasdaq's going to flip shit. If other stocks start to fall down as well that are right on their half cap, let's see what Microsoft's doing. So Microsoft 420. I mean, like I said, I hope the market stays put. I don't like markets to collapse out. I don't. So if res is greater than 0, that's good. Okay, that's really good. So we're gonna see. So we're gonna watch a couple of choice stocks today. Let's see what we got. I want nothing more in this market to be nice and bullish. I love trading bull markets, but you know what I love better than trading bull markets? Being smart and sniffing out a bear market and avoiding losing money chasing long at the top. Okay. Res less than 0, the gap wants to fill, and that is the problem. So that is the one problem. So it's a domino. I'm not betting on it, but it's a domino effect. So domino effect pretty much is this. And let me actually remember this. Okay, so nothing's happened today, but I'm gonna talk about it. Let me give it to my guy. Here's my stuff. So domino effect. There's a lot of indicators stacking up right now that are showing a probably dire condition in the market. So a couple of things that I'm going to show you really quick. So the market at the top, I said this is really bad. Normally, when you hit these upper DD bands, it's an indicator and rocket scooter. Down here, each futures contract has these bands. It has to do with margin requirements. This band is usually a resistance point, and there's a 4% chance you break and go, and 90% chance of day, or 4% of days break and go, 90% of days tuck back inside the band and close there. It's a structure point in futures. I don't normally short off of this band if this ratio in the top left, this is the bull bear bias, is greater than half. If the stocks are bullish, I usually don't short a bull market, but I usually avoid chasing the long. So right here where I circled, I told everybody I'm not doing anything because there's a possible crash scenario building up. The domino effect. So normally the 96% desire for this to tuck back in. Again, I'm not longing, I'm not shorting because of the cautions here. I don't do any trades outside this band unless they're really strong longs off of strong pivots, and we don't have any today. The other thing is that when this tucks back in and is trading anywhere, it doesn't matter. Resilience is an indicator that is a gap fill predictor. What this is an aggregate of what all the stocks are doing. And you can see that this white number is negative. When this white number is negative, it means the majority of the market cap is actually filling their gaps. On Rocket Scooter, this white box is the gap. The S&P closed here yesterday and opened here today, or SPY closed here yesterday, opened here today. So if SPY is moving higher and the stocks are fluxing down, then what happens is either the stocks are going to rally to catch up or SPY is going to sell off to come down. And more often than not, the index is tracking the stocks. So unless we start seeing some momentum in the stocks, the index sitting here has a high probability of wanting to fill its gap as well. S&P gap up is wanting to gap down. And the problem is that monthly hedge pressure is in the way. The desire to fill the gap is a very strong thing when this number is negative. Gaps don't want to fill. They gapped up for a reason. But up here, the domino could be a potential crash. So be very careful watching the market. PMI just came out as well. So watching what the stocks are doing. If the stocks are negative, then the index is likely to fill its gap and then break a key structure point on monthly options here, which whenever you fill the gap and break MHP, it causes a chain reaction, which can actually crash the market today. So nice, gentle move up. It smells bad. And I'm very cautious today because of this particular thing. This number needs to pop above 0 for me to feel comfortable in this market today. The PMI just came out, I think is, take a look today what it is. Manufacturing numbers came out. And so the market's getting a little bit of movement here. I'm trying to watch what it's doing. And like I said, nice gentle market right here. And I'm worried about it crashing. A gamma event on monthly options causes dominoes to fall. So what I'm not doing is taking baby longs in here to try to get 10 or 15 points when the market could fall 3 or 4% today. And so this is probably one of the strongest warnings we've seen in a while. And so we give you guys these back pocket indicators and these techniques so that you can see these things too. If I taught you today something, and like I said, there's no investment advice, but I've taught you something today, and you want to carry these back pocket indicators with you wherever you go in life. Avoid, it's like a parachute. So if you guys want it, we'd love for you to subscribe to the platform. These indicators are something we teach. It's gamma exposure. It's the new hottest thing out there. We're kind of on the forefront of teaching people how gamma exposure works. So the problem is, I'm not betting on it. So let's just be real. I'm not betting on it. But the potential is there. Resilience number is no joke. The market could very well rally from here. But there's just like there's no real good reason for me to take a trade on this. I'd like to see it rally. I'm not going to lie. But one thing is it's just too dangerous for me to want to take trades on. I don't usually long on this open move unless res is greater than 0. So let's see if the stocks are getting any movement here. Right? I'm going to make this a little bigger. I want nothing more than to see this market rally. Trust me. Don't forget, we have giveaway today, ETF. Don't forget to go to the Discord. Subscribe to the channel here. Go to the Discord, enter the contest. We're doing 350K in a day evals. But yeah, so like I said, this chain reaction is something I have a whole class on. It's called Res Can Predict Hedge Pressure Break. And it's one of the most cautious setups you get. You get a nice clean bull market. Bull run, gap and go, looks nice. And all of a sudden, secretly, while the index is being squeezed, the stocks are not given love. So in this environment, as you see, it's trying to like catch up, but the stocks are moving here. So that can save the market if that resilience goes greater than 0. That's why I'm not shorting it either. I don't like to short against the bull market. Apple's back on the move. Trying to move. I'd love to see the market turn around and be bullish. But no setups for me today. No trades, nothing. Just letting it move. So if this number pops back above 0, then things are better. Yeah, if res improves, that's exactly it. So this is telling you that the stocks did not gap and go like the index did. So if the stocks are now catching, remember I told you either the stocks are going to move up or the index is going to move down. So in this particular case, the stocks caught back up. So now the stocks are like, okay, we're going to move. Like I said, just, it's always a warning sign against the market. It's not like it's a, it's something I caution against. So in moves like this outside of these bands, I don't like to trade in low probability environments. So the 4% I don't. So I'm just very cautious on these particular days. This is a strong caution because what can happen is it can have a big catalyst on the market, a big effect, if that does happen. Now, again, I don't like for it to happen. I don't bet that it happens, which is why I don't take shorts and nothing. I just kind of sit back and let it play out. Ideal longs today are from bull zone bottom, MHP, you know, as long as things are good. This is looking pretty good today. Looking better. This is a better sign. So as soon as this number turns positive, then things are off. So that's why, like, in this particular environment, I just like, okay, let me sit back. Let me let it destroy the market today and let me get a good tip. So even if it does trickle higher and push higher, it's like, I'm not missing anything. I'm not making anything. What will be my plan? I don't trade out. I don't do anything outside of here. I don't do anything. Thank you. Yeah. So. Thank you. Don't let the dog eat them. Oh, he's not here today. Okay. See you later. Thank you. I sit out of 4% moves. I don't trade up here. I don't short this when this number is bullish either. So it's like a lot of our rolls together. Normally you can short this band, or I can short that band if this number is less than half. I do. But other than that, I just kind of sit out and let it play. Look, like I said, keep an eye out on that. It's not going to be a clean day today. Usually second taps of the band are pretty good. If the market's trying to pierce through, it can be really good. We're just not getting any love from the stocks. And Nasdaq is back to being negative. So resilience is a gap fill aggregate. It's one of the best tools that we have. It is by far one of the most comprehensive tools that you can put in your trading platform. What it is an aggregate. When somebody's asking about it today. So if it does this basic thing, right? SPY, if I'm trading futures, right, ES or NASDAQ, let's do ES for an example, is tracking the S&P, okay? And so is SPY. They're both tracking the S&P, okay? And SPX is equal to some function of the stocks, okay? Let's put F of S. It's a market cap weighted function of stocks. So they think the market cap weighted value of all the stocks add up equal to the S&P. Stocks go up, S&P futures go up, SPY goes up. So what this indicator actually is showing a really cool principle. So we know at the open and close, there's always high volume, right? High volume here and high volume here on any stock. There's always high volume open and close. Whole process there that we're exploiting. So in the middle of this box, if the stocks are moving up, price only goes up when the market's looking for sellers. A lot of people buying, so the ask goes up until sellers are found. So when the market's going higher, people are, the market's seeking out sellers. And so the idea is, where will sellers and buyers be? Well, anywhere where there's high volume, there's probably a high probability of buyers and sellers. So here and here are high probability buyers and sellers. So what resilience actually does is it looks at all the 500 stocks and it makes this one particular inference. If every single stock is sitting at its own halfway point between the gap, resilience is balanced to be 0. Okay? 0. If one of the stocks, if they're all sitting flat and one of the stocks moves there, resilience is designed to be 100. If they're all sitting flat and one of the stocks just moves there, just moves on the other side of that, resilience will be negative 100. And it's market cap weighted. So what resilience is doing is it's telling you a seesaw. If all the stocks are balanced, are the majority of the stocks pushing through this side of the box? Because what it does is it assumes that if you're to snap your fingers, all the stocks are going to seek the place they're going to. So an example is if I'll say if Apple was here and Meta was there and all the stocks were in the middle. What resilience is going to do is going to snap its fingers and say, okay, all the stocks in the middle are at the middle. Meta is going to move this distance to fill its gap, and Apple is going to move its distance to fill its gap. It's going to take these implied distances it needs to run and then weigh out what the S&P's implied value should be if all the stocks simultaneously filled their gap appropriately based on where they are relative to that midpoint. And so it's going to do that, and it's going to look at the current value of the SPY against the implied value of the SPY and tell you if SPY needs to move up or move down to catch up to that destiny that hasn't happened, which means resilience is designed to be a leading indicator of the market. It's telling you if the stocks, like if I'll pull up some stocks as an example. So the idea is it's looking at if that seesaw's tilting one way or the other based on what all the stocks are doing. It's going to be an example. Let's just put up like, let me see what Meta's doing. I'll pull up some stocks here. So Meta right now, where it is, the algorithm in resilience is saying, aha, Meta being here has an implied value of here. Meta's likely to be here at some point because it's above the halfway point. If Meta was down here, it would go here. So it's actually saying right now that SPY is saying that Meta's implied value is 604.68 off to the right of my screen. And now Meta's implied value is 599.28. And you see when Meta just crossed this line, look what resilience did. It came down. It's so sensitive to watch what stocks are doing to let you know the desire for the stocks to fill their gap or not. It's a gap fill predictor on the index. So if Meta just moves through here and resilience is now negative, it's telling you that the NASDAQ is likely to follow suit, okay? Very rapidly so. So stocks are bouncing around and just Meta moving down. Look how NASDAQ has taken a nasty turnaround again. Do we all see that? So it's designed to be a truth indicator of the market. The index trades up, but the stocks themselves are fluxing through the bottom of the box. Why would QQQ gap and keep going if the stocks are moving through their box this way? That's what it's telling you. Y'all see that? So what resilience is it's looking at the implied value of what the NASDAQ should be and the S&P should be if all the stocks in the middle of this box were to fulfill their destiny. It doesn't mean it's going to crash, but it means it's very sensitive to the market. And it means that while the index has gapped and gone, the majority of the stocks are sitting in the middle and trying to fight below. Stocks aren't gapping and going like the index is. So the index is overbought or short squeezed higher than what the stocks imply it should be. And if the stocks are filling their gap this way, then I take the bet that the index is filling its gap as well to track the stocks. Do we all see this? Resilience by far is a nod of genius towards what engineers can put together when it comes to markets. It's not a rinky-dink tracking or price-based indicator. It's an arbitrage indicator. The implied value is the move that Apple and Meta hasn't achieved yet. It's predicting what those values will be. So as an example, let's put up some other stocks. So like right now, NVIDIA is out of bounds. NVIDIA is going to have very little effect on resilience. Resilience is weighted to be very sensitive right at the middle, okay? So let's see what other stocks are doing good today. Amazon. So right now, anything outside of the box is maxed out. It's not having an effect, okay? So let me find something that's kind of in the middle. Let's look around this other sectors here. Okay, JP, perfect. Okay, so right now, resilience is taking into account that JP Morgan is below the middle. So it's taking into account there's an implied move of JP that right now, JP is moving to fill its gap here. So it's saying that the S&P actually needs to be recalculated with JP Morgan being at 240, not 240.91. And so if I were to snap my fingers and it were to fill its gap, then it's telling me that the S&P is overpriced by that much. And resilience takes that into account. So when resilience is negative, the S&P is overpriced relative to what the stocks are going to be if they fulfill their destiny. An overcomplicated audit system. Well, it's designed to be a leading indicator because the implied move hasn't happened yet. That's the genius, right? It hasn't happened yet. So resilience is telling you that stocks are going to move down relative to where the index is trading. So with resilience being negative, it's a leading indicator. And we've been talking about it for like the last 20 minutes. Actually, I talked about it right here, right in the market open. So it is overcomplicated on the back end because, you know, I'm a mathematician, but on the front end for you guys, the gap fill predictor is what it does. So at the top of the market, right, what it's telling you is that the sum of the stocks in NASDAQ are here somewhere. Yet QQQ is up here. So either the stocks are going to rally hard to catch up, or the spring in QQQ is going to snap and it's going to fill its gap. So that's kind of what you're looking at today. Okay. And that spring is trying to reset. It's not like it's going to, and I don't bet that it does, but we can see that there's a spring literally yanking it down. That's the tracking algorithm. It looks like people got squeezed on their shorts and that pushed Nasdaq higher, but it's not true buyers. The true scent on Wall Street is people are selling stocks today. And for the last 30 minutes, and I tweeted this just ahead of time so you guys can understand, it looks nice and stable, but here is a dire warning sign that the market's going to crash today. Crash. Crash. Literally crash. Because the gap fill on S&P is going to break monthly hedge pressure on the way down, which will cause a gamma event. And if I call that from here, is that worthy of a sub? This is a free YouTube channel, you guys. I ain't kidding you. You guys can hang out here every day. And I'm like the most bullish guy in the world. But I have the best back pocket crash detector exists on planet Earth. I'm going to make a reel if it happens on Instagram. It ain't going to go viral. Kids don't care about learning the markets, but hey, watch this. If I'm right, I'll do you guys a solid. If I'm right about this, and you guys are like, okay, this is cool, I want to learn it, I'll hook you guys up with the classes some way. Like, I'll give you guys something. Like, I'll give you all some free, come to our classes a couple times for free, and I'll teach you guys this in more detail. Sound cool? Like I said, I don't like to bet. I don't like to bet on a crash. I don't like to see markets crash. I hope the market doesn't crash. A gamma event is probably the strongest sell-off event that happens. Monthly hedge pressure break is one of the biggest problems we have. Monthly maps already shows weakness on QQQ as well. Are we all on the same page, team? Like I said, at the top, when will Matt short though? Oh no. Oh no. No. Matt should get sit back and watch. Let's sit back and watch. I'm gonna take another 20K payout from ETF today, so I'm gonna go out there and risk it. You kidding me? I'm just gonna sit back and watch. What I'm gonna do is not get caught with my pants down at the top. Like I said, resilience is a really good tool. It's like a truth indicator for futures. So when I'm trading S&P futures, which is what I'm doing in Nasdaq futures, I need to pay very close attention to what the stocks are doing. So what Rocket Scooter does is it helps you pair those two things together because they're very, very, very important indicators that do go together. It's not just where my futures pivots. It's the futures are tracking the underlying stocks and index. So that right now, the stocks are selling off and the index is rallying. That's what resilience is telling you. So the stocks either need to rally or the index is going to snap back down, one of the two. And I don't like to bet on a crash, but if I see this, I always err to the side of caution. If the stocks are selling and the index hasn't, I'm on the sideline. I'm not trying to buy dips for the big long up. You know what's going to happen today? Like I said, a gamma event is probably going to fall. So essentially, we have what we call back pocket crash indicators, a Rocket Scooter. Back pocket. I can look at the market and say, holy shit, it's going to probably crash today. From the top. From a gentle, nice move to the top, I'm like, what the hell? It's probably going to crash. And so far, this better be worthy of a sub. And I want you guys to go tell all your friends, holy shit, I saw something amazing today. Please tell me you learned something today. Just give me the benefit of a doubt. I want everybody to go out there and retweet what I tweeted an hour ago that said this was going to happen. Okay. Yo, Tavern, what's up, bro? Good to see you, man. What'd I fucking tell you guys? What'd I tell y'all? Let it fall, baby. Let her rip. What you doing today, Tab? You shorting? You longing? What you doing? If you subscribe, yeah, you guys should subscribe. Just learn, come to the classes. I'm not gonna lie. These indicators are cool. Like, and it's not investment advice or anything, but it's like we have a very, very, very high, a lot of our stuff, 96%, 4% are actual backtest numbers. Everyone go, can y'all do me a favor? Can everyone do me a favor? Can y'all all go here? And everybody go retweet this. Or go like it, or go comment on it, at least. Give me some credit. At the top of the market, and I don't sit there and call doom and gloom often. I'm not a naysayer to the market. Okay. And look, the stocks got worse. Okay. I'm not like a doom and gloom trader. But resilience, like there's a saying, and again, I hate the saying because it implies something that's not necessarily true, but the saying that people like to throw around here is that resilience is never wrong. And it's not because it's incorrect at showing what the market's going to do. The market's random. What they say is that resilience is never wrong at revealing the truth. It doesn't mean that the market has to sell off, but resilience as a caution is like the best tool for a caution. And people say resilience is never wrong. It's telling me that the stocks are selling off when the index is rallying. Use that information, whatever capacity you wish. But I use that information to avoid longing at the top like a fucking idiot. So understand when people are like, they say resilience is never wrong. That's the alliterative cool thing they say. But it doesn't mean it predicts anything. The stock market is particularly random. But it does alert you to a caution when the market's nice and bullish. And you go, wait a minute. Well, the stocks are down here. Something weird is happening, right? So just keep that in mind. That's kind of what, like I said, the market can very much rally from here too. So anything can happen, but it's got me as a caution, in a caution right now. Do you see what I'm saying? So, and more stocks have deteriorated through their half gap right now. So, everybody do me a favor. At least go to that tweet and like it real quick. This tweet right here. Do me a favor. Help me make a little bit of awareness for at least some of our tools. I would love nothing more than to see the market rally. But at least I'm not caught on the wrong side of this. It's pretty crazy, and the market is trying to rally, and the stocks are trying to move. But the one thing I just don't ever want to deal with is a gamma event. It's not worth taking 10 points or 20 points in the S&P to be upside down, hundreds if it does not survive. Why don't I long QQ hedge pressure? Because number one, we broke outside of DD bands. Down here is a potential long, but res is less than 0. So the gap fill is stronger than hedge pressure bounce. So I don't normally take it. Right? So normally, like because of all the cautions we have, I'd be trading small. And with the disagreement on resilience, and I don't trade at all. Like I said, the market today has gone practically nowhere. I'm not chasing long, chasing short. I'm just waiting, right? Investors are very much sketchy. Yeah, you guys are seeing it, right? So the point is that boy, oh boy, with all my heart, I hate to see markets crash. I hate to see people hurt. I hate to see the economy bad. I hate to see bear markets. I'm the biggest bull on the planet, but I can sniff out a bad market from a mile away. And if today's that market, I'm glad that I sniffed it out. So you guys see me, like the reason y'all see me don't blow up accounts live on stream is because I'm very cautious at trading. And I hope to God that this rallies today. I would love nothing more than this to be the reversal point for the new year. So there's a lot of work the market has to do to get there. So we'll see. Nasdaq is fighting. The stocks aren't giving enough love. 96% of days will pivot down below this green line. I'm still not shorting it. So the funny thing is that the trade I wanted was to short from there. But when this number disagrees with that, it's kind of funny that the stocks are stuck in bull territory, but they're selling so hard from their bull zone. So it's like, this number needs to be less than half for me to want to take that short too. So not everything's lining up to be bearish. That is the one thing. There's just like an arbitrage event sitting here. Normally, when this number is greater than half, the market loves going to here. It doesn't usually reject and sell. So it's this guy right here that I'm worried about. So I have competing indicators today as well. Like the stocks want to stay floated and they want to fill their gap at the same time. It's a really weird shift of market cap, which likely means there's a couple of really good big stocks that are rallying and a couple of really good big stocks that are selling off. That's usually all that ever means. And you know, I'm going to tell you, I'll let you know about the market. Let's go find them. There you go. Energy, crazy. Utilities, good. Tech, flat. You know what I'm going to tell you? Tech flat means that Amazon, Meta, Nvidia, some of them are really high, some of them are really low. Ready? Let's find them. I bet you Nvidia is rallying and flat. There you go. Nvidia rallying and flat. Let's look at Meta. I bet you Meta is selling off. Meta selling off. I'm so fucking good at this, guys. Like, look. Okay, let's see what Amazon. So Amazon's probably rallying and flat too. Rallying or flat. Amazon's flat. There you go. So some of the tech doing this, some of the tech's doing that. That's why you got competing indicators, because tech is so heavily weighted in this index. Tesla. I don't know what Tesla's doing. Maybe it's flat. Maybe selling. Who knows? Probably flat. Yep, Tesla's flat. So you get a lot of kind of like tech is all over the place right now. You're not getting a clean, steady market, right? When I see tech flat like this, and I know a couple stocks, and a lot of the stocks are selling, it's a market cap thing. The market cap weight is lower, which means some of the stocks are in a very peculiar spot, while a lot of them are okay. Would HB be stronger on Fridays? No. Weekly doesn't mean calendar week. Weekly means weekly options. So for like SPY, weekly options are any options that aren't a monthly. So Mondays, Tuesdays, Wednesdays, Thursdays, Fridays, those are all weekly options. So SPY weekly is going to incorporate all the weekly options in SPY, which is going to be 2 weeks of Monday through Fridays, excluding the third Friday. And then after that, subsequent Fridays. So weekly options in SPY, there's the options schedule changed a couple years ago of what kind of options exist for the index. They used to be Monday, Wednesday, Friday for 6 weeks and then only Fridays. But now they created Tuesday and Thursday options. So you have Monday, Tuesday, Wednesday, Thursday, and Friday for 2 weeks. Then weeks 3 and 4 are Friday only. I'm sorry, weeks 3 through 6 are Friday only. And then after that, you just have monthlies every third Friday. So a weekly uses the weekly options. That's what that means. It doesn't have anything to do with Monday, Tuesday, Wednesday, Thursday, or Friday on the calendar day. Each option is included, but balanced for today. I hope this market stays put. I really do. I don't want to see the market crash. I'm really I hate market crashes, but also I love to avoid them if all possible I can. Nothing feels better than to not be in a position when the market is shitting on itself. So there is some potential for this to move. S&P futures are trying to move. Nasdaq futures are trying to move. There is some squeezing right here, but Eric Harper says, you're greatly impressed by you and your comprehensive perspective and depth and understanding what moves the market. You're saying AMP account. Oh, cool. Yeah, I love AMP. They're good. AMP is good. Contacting valid questions? Yes, sir. Yeah, no problem. So our thought was that, I wasn't trying to use traditional technical analysis to do anything. I was trying to find ways to get me ahead of the market. And it's like if the S&P is tracking the stocks or the SPY is tracking the stocks, then can I have an indicator that can at least tell me what the stocks are doing relative to what the SPY is valued at? And is there a difference there? Arbitrage, right? And so the idea was for us to create indicators that are that powerful for you guys. It's an actual leading indicator. And the proof of that, and that doesn't mean that it's going to prove anything. The market's random and it very well could rally from here. But from this exact moment in time here, right? Even here, when the market popped to there, the indicator was negative. It shows a discrepancy. This was negative while the S&P popped. Okay. Now, this doesn't look like a crash. This looks good. It looks like it's trying to work its way out. S&P is starting to do better. So hopefully the market stays put. Crashes are bad. They hurt everyone's feelings. But you can see on this pop, I'm not eager to chase this rally because the stocks aren't doing so hot. And that's kind of one of the things we wanted to see was, well, if I'm trading futures, a lot of us just use technical analysis, right? Well, I don't do it anymore, but a lot of you guys put pivots on charts, look at VWAPs on charts, look at indicators on charts, and you're just looking at the S&P futures and its own price action. You're missing the key components of what makes this move to begin with, right? So what makes the S&P move is literally the stocks in the basket. We have some indicators sitting here that tells me what the stocks are doing. We do. This one is a stock bias. Right now, the stocks are still biased. 66% of the market cap is bullish. So that's what's creating some bit of upward thrust. But then while bullish, a lot of the stocks have filled their gap to the downside or filling their gap to the downside relative to the S&P's value. So there's two competing things. And you can see the evidence of the two competing things. The market's kind of volatile as one mechanism is yanking it up, another mechanism is yanking it down. And as you see, when Papa Bear decides to sit out in the market, because I can see that from a mile away, you can tell me why I have such a high win rate when I do make trades. It's because I can see when things aren't clean. And if I wait for just clean setups, that's it. That's what I do with my time. Just wait for clean setups. So right now, I like to err to the side of bullishness. I don't like to short markets. I don't like to bet that markets are going to sell off. I like to avoid it. And if I think it's going to sell off, I just get out of the way and I watch it. If it does happen, I don't lose anything. So that's why I don't blow up accounts live on stream. You never will see me do that. I usually take a loss or 2 or 3 or 5 if I have a bad day, but it's always controlled. Right? I mean, I bust evals. I'm not going to lie. That happens plenty of times. But my real trading account, you don't see me blow up. Where real money's on the table, you don't see it. You don't see it on stream. I'll delete streams. You guys watch. I haven't deleted. I don't delete any streams. You can see every stream I've done. There's no, oops, I'm losing. I'll see you guys later. Stream abruptly ends. Don't do that nonsense. I think the market's starting to reset itself. That's good. I like to see the market be bullish. I really do. But Nasdaq is telling the real story, guys. And that the best part about this is not being right on the trade. I teach this to people all the time. It doesn't matter being right on the trade. It's being right about your risk. And to me, with all the warning signs I have, do you see me like, oh, let me take a bet on it? Because it's still so random that the market does collapse. It's just such a random event. But do you guys all see that because of all the warnings, I have a risk management system? I'm like, you know what? Fuck this day, right? Right here, I'm like, nope. Right here, I'm like, nope. And I'm like, let me just kind of hands off today. See, as a trader, that's such a powerful thing to be able to do that. Like, okay, I'm going to hands off today, right? Blue line's overnight dynamic hedge pressure. Red line was an impact. Red line. Just I need to delete that from yesterday's catalyst. So it looks like the market is still trying to move, and this is actually pretty decent. Good sign. Nasdaq's still not giving us love. So kind of like where you are staring at this, right? That's kind of the point of, you know, competing indicators is really good, right? I mean, I hope you guys can see that. It's really good at finding good spots to trade at, avoiding crappy spots to trade at. Patrick, you're welcome to do whatever you want. I just won a trading contest with an 80% win rate. You didn't see my... Here, let me show you the tweet. I tweeted my broker statement, bro. Oh, let me send it to you. Here. Pat, here. This is for you. I tweet it. I tweet my broker statement. I tweet my bank statements. Have fun. Patrick, click that link right above your face. There you go. Let me show everybody. Hold on. Is that the one? Here, right here. I won a futures trading contest. First place, right here. This is my P&L curve for that entire month of trading. I got first place in a contest. This was it. 80% win rate, and my run up to drawdown was 4 to 1. Risk to reward usually 1.5 to 1. I have a couple of scalps that I do that are 1 to 1 trades. A lot of my trades are usually 1.5 or 2 to 1. And I tweeted the P&L curve. Any questions? I mean, I like I said, I tweet my statements. I tweet my performance. I tweet my bank deposits. So you have fun with that one. But yeah, no, go ahead. I'll actually, if you want to come to our training, if you do it for a month, I'll give you a refund if you don't even like it. To our training for a month, I'll give you a full refund if you don't like it. Oh, I mean, I peaked in top 5 in the Robbins Cup too, the Global World Championship of Futures. Before I lost interest in it. I think I probably closed at like 10th or 11th place in the world. Any more questions? What else do you want? You want me to stand on my head? I just got lucky, dude. I'm gonna tell you, you're totally right. I got lucky. I literally got lucky and won a contest. I got so lucky. I just made like, you know, the dice rolled in my favor like a bajillion times. Out of all 1,532 trades I made, I just got lucky 1,532 times. I'm the luckiest guy. Like literally, bro, take me to Vegas. Put the dice in my hand. I literally, the dice roll in my favor 1,500 out of 1,500 times. Oh, the Robbins, we go multiple count teams, go multiple directions. Yeah, so so trades by Matt, the arbiter of this, I sent him my account number and my broker statement and everything. So just to prove that we only had one. Dude, we did everything right. Yeah, no, I only had one account, and trades by Matt can validate that. Yeah, he's trading's a nice guy. He would never lie. I repeat, at the start of it, because you can open multiple accounts, Matt was like, all right, everybody that's entering, send me your one account, because Matt says, I'm going to call bullshit on anybody that has 2 accounts. And all the people sent Matt their account number, including me. So there you go. We thought of everything. Patrick, who's your favorite streamer to watch? Tell me somebody who's good that you watch. Who's your favorite streamer in the trading world? No, he's not here and try to learn. He's here and being salty. He lost a bigger competition. He lost the competition of life. He's trying to figure out how our stream tripled in size. I bet you he's a streamer. It's probably cut in half. You like Daniel who? Because he's honest. Well, I mean, you watching my trades live on screen, a friend. But any streamlining of your trading course? I love you, bro, but the loquacious approach loses me too much. Well, it's more about training. Course is not about streamlining. See, this is where I gotta tell you, Mike, and all you guys. I know I love you too, but for everybody's like, I want to learn quick, and I'm gonna tell you something. That's not the right answer. The right answer is you need to commit to training. It's not learning, it's training. Like the whole art of being good at trading is a mental game shift. It's like you don't just go to the military and they're like, here's your gun, this is where you pull the trigger, good luck. Let's streamline trading. Yeah, you see that guy, it's the enemy. Aim at them, pull the trigger, you're good. There's like boot camp for a reason, right? Your long grueling process is designed to reshape you. And so like the point is that yeah, I could streamline the courses and just here's the indicators, A, B, C, D. That's what the cheat sheets are. It's like each tool has a cheat sheet that goes with it. But as far as the training, it's designed to rewire your brain to think differently. And that it takes a little bit of time. And while you're right, there's a reason why like the people that go through at least our courses sing the praises. It's not because the course material, it's because of how it's trained. They really, like at the end of it, they get it. They feel like they've gotten something. Like they think differently about the market. And that's kind of what requires like a more grueling process. Yeah. Patrick, so one of our members back tested the strategy. This number actually came from a member who decided to do this on their own. All of our numbers, our stats, were actually put together by a member committee. I didn't even put them together. FYI. I don't know if you knew that either. One of the members, I don't know if Humble's here or some of the other folks are here. The members did it. Members were like, let me put together a back test and see if this guy's full of shit. And they came up with the numbers. Even I didn't come up with the numbers. You just got to stick around. Pat, what you're going to do, Pat, is just stick around. You're going to see good performance. That is not. What was the sample size? This is current. So we always look back the last 6 months and then we modify as it changes. But this going back 4 years is pretty accurate. The yellow and blue are 2 years worth of data. I think Humble is 2 years, right? So we don't just look at a historic backtest of 2 years. We look at the current, most recent, to also change the environment of the market, like a bull market, a bear market. How do these shift? So in the most recent 6 months, these are the stats of this green line. A member put Garrett's here. Garrett's here. Garrett's the one that did it, and Garrett's a member. Garrett, do you work for me? Do I pay you money? Garrett's the one that actually put it together. He's a member volunteer. He's a math dude. And a member put it together. That's the best part. Garrett's the man for the stats. And so the idea is that when the stats are different, we actually have a committee. We meet, all the people get together, and it's all member volunteers. Like this is a member run thing. You know, it's kind of a neat setup. Give you the rules and you back test it yourself. Yeah. So for you guys that were asking about the sign up process, let me show you guys how you do this. Like I said, Patrick, go buy the stuff and do the backtest yourself. Have fun. Stop interrupting the stream. Here, everybody, this link I just put, it's only 99 bucks for the platform and the indicators and the trading and the Discord. So it comes with the actual platform in that price too. So you get the actual platform too. Don't forget 90% off sale ETF right now. I don't know if the Apex sale ended at midnight, but you guys can still try the code. I also just got a code for Tradeify. So I was chatting with Brett yesterday. He hooked us up. If you guys are using Tradeify, if you go to our Discord, there's now a new thing called affiliate links. All of our affiliate links are there in the Discord. So now it's like, if you guys have a program you want me to get an affiliate link for, so you guys can get discount codes and stuff, just let me know which one, and I'll go get it. Hey, Patrick, let me tell you something cool. Okay, ready? This is the last thing I'm going to engage with you on. So I started trading, right? I created a style and system for myself. In 2019, I built an app, like my first app, right? And people were like able to access the app. In 2022, I built a whole trading platform. The total cost of building this trading platform was roughly like a little over $2 million. So it's kind of like, you know, you don't just like invent that kind of money. Like I'll tell you, go build a trading platform and tell them how much it costs you to build. Employ, 20 employees and contractors in a company and things like that. I'm not a random YouTube guy. I'm CEO of a tech company that built a trading platform. It's different, but I also am a YouTube guy as well. Just to show I trade, because that's the difference. But I'm not like a YouTube, a YouTube guy. Just FYI. I've kind of been on like every major futures podcast out there. I've been interviewed by so many people. I'm kind of like more than just a YouTube guy. I'm also a guy that built something cool. Give me some credit. You give some kind of love. But like, yeah, like who hurt you, bro? Like seriously, people like, they're so angry at life. I know what it's like, to feel angry. So how does my style work? Okay. So what we do is our style is to predict volume. That's it. So all the indicators that you see on the screen are volume prediction techniques by different mechanisms. So the three major indicators in equities that we do are called bull zone, bear zone, hedge pressure, monthly hedge pressure. What we do is we take all the options data that exists. We have an Opera data feed. Opera is the options authority. When the data feed comes through, we crunch all the numbers of all the options. We look for zero risk market maker options. I wrote an algorithm that mathematically can derive zero risk options from the lot, which means market makers are engaged in trades against you or me liquidity providers who balance their trades to neutral. When you find neutral trades, you can sniff out by reverse engineering where the actual risk trades are. Bulls are here, bears are here kind of thing. Okay. And then you can find the exposure of the sold options. It's called gamma exposure. But the difference between us and other JEX models is that we don't use the OI as a heat map like most JEX models do. We're a step above that. We don't take all the options and say, yep, this is the gamma exposure. We remove the majority of the options that don't have zero risk probability. Zero risk means it's very likely to be delta hedged. Speculative trades aren't hedged against. So if you could predict where the hedging is going to be, like on those options and those options and those options, ignoring everything else, then you can predict where high volume is going to be in the market. So with the equity side, if I'm trading S&P or NASDAQ futures, I need to know where the high volume pivots are going to be. So if you give me any random stock, I'll prove it to you really quick. a bull zone, a bear zone, and the two hedge pressures is predictable high volume when you touch them every single time, because it's accurately finding where market makers are. They're high volume pivots. Here's NASDAQ. NASDAQ, high volume. As you see approaching hedge pressure, there's volume, okay? So we're predicting volume nodes, but we print out the numbers at 9:30. So all day long, I know that that's a high volume node. That makes sense? Netflix. Okay, like let's put something in Netflix, right? So Netflix has touched a bear zone top, which is here. And bear zone top is high volume relative to the rest. Monthly hedge pressure is the next one. If Netflix gets here, you'll start to see volume spike as well. So what it does is it shows you where the volume is likely to be based on different mechanisms of hedging. Yeah. How do I trade it with the info? So the info off to the right, there's a flow path of where the hedging's balanced at. Here is showing me that Netflix has downward pressure towards the orange, and you see that downward pressure towards the orange. I only trade against the zone boundaries here, here, or here, and I trade along the flow paths. That's it. So a little flashcard shows me the flow path. Netflix from here is downward pressure there, as the arrow is implying. So with stocks, we're just using options to find volume, and that's basically what it is. And I'm only trading where volume's going to be, which is kind of the obvious thing you want to do. You guys want to do like a bunch more stocks? Throw me some more stocks. I'll just show you how it works. Andy says, no bullshit, not signed up to anything, but from watching the stream the past 2 days, just locked up for the day, passing 550K compounds. Damn, brother. Well, that's good, dude. See, for me, I like to have a high win rate when I trade, so I'm not always trading. I don't like to lose money. I've learned that the best way to make money is to not lose it. So as you guys see me sitting out on the market today, is kind of one of the best things you learn from me, right? So Palantir, right? So bull zone break, hedge pressure, clearly high volume. Bull zone bounce right here, high volume. Hedge pressure break right there, high volume. Any questions? It's hard for people to accept a paradigm shift. This is groundbreaking research that we've done. So in my life, like, it's not like I just stumbled out of nowhere on YouTube. I know this rando here is like a YouTube guy. So I'm in my 40s. I used to teach chemical engineering class at the University of Houston. I have a chemical engineering degree. As a math genius, took the SAT when I was 12 and got a perfect score. I'm a different kind of human in the stock market world. I'm weird and different. So I'm an engineer by design. I've been trading for a decade. To me, it's different. It's not coming in here trusting the market. It's like Elon Musk, if he was to become a trader, to go in there and say, I'm going to reinvent what people do. I'm going to send people to the moon kind of thing. So give it a little time. Just hang out. You'll learn something. What we have here is actually special. It's different. Volume prediction is different. So the idea is, while you're using all kind of indicators and tools, what would help is for you to also sniff out where a trader is going to be and what's important. Do you see that these letters right here in this flashcard tells me that there is green arrow pointing up from blue, and there's green arrow pointing up from blue. This is printed at 9:30 when the day starts down here. So all day long, I can guess where the flow path is. Options create volume. Because if I sold you a call at 77 and price goes through 77, I need to buy somewhere between 0 and 100 shares per call if I sold you that option. Most of the dealers are going to delta hedge. So at 77, they will have 50 of those 100 shares already because delta is 0.5. As it moves higher, they're going to have to buy 10, 20, 30 more shares up to 100. So passing this boundary, the majority of options at 77 are going to get 50 shares bought against them just because you went from that side to that side of these options. So here is high volume because of that process. And so if you can find where high volume is going to be, all it does is show you where other traders are going to be. So everything else, what should I buy here, 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 here is arbitrary. If I'm waiting to buy and market dips to where volume is going to be, I can choose to long where the traders are likely to be. And so the idea is, let me find where volume is as a second layer to whatever analysis techniques that I do use. If that makes sense. Tab, all right, man. Have a good day, bro. So hopefully that answers your questions. It was asking. So the idea that the market is trying to make a push bullish is not a terrible thing. Not a terrible thing at all. But Nasdaq still isn't changing. Let me refresh my platform just to double check. Everything's looking good. Yep. I'm like, when Nasdaq wasn't moving, I'm like, is it frozen? So if you guys want... What school? Boof, I went to University of Houston. Oh, by the way, Boof, you asked the question about the sign up. This is it. So, and I tell you guys, if you sign up for our stuff in 3 days, you can have like a full refund if you don't like it. We have over 6,000 active users in our Discord, roughly 10,000 user accounts in Rocket Scooters. So there's a lot of people in our community. It's pretty big. But everybody has the same thing. If you don't like it, we're not like, here, we're going to take your money. We develop the platform, and all the proceeds that come in go into further research and designing more cool stuff. So I went to University of Houston. I graduated cum laude with a chemical engineering degree with a sub-focus in reaction engineering. So that's reactor design economics. And I took graduate classes as an undergrad because I was going to get a PhD. But, and I worked for the head of the department in like this limelight job where I was on a team that at University of Houston that worked on the project to design the diesel engine catalytic converter for the 2007 Clean Air Act protocol that required all diesel engines to have them. We were a small part of the team that actually designed that. So one of my real claims to fame is being part of that whole process. That's a great thing for the environment. Now, every time you go into a Buc-ee's or a gas station, you see jugs of urea sitting there. Those are for your diesel engine catalytic converters. I was part of the team that designed the catalyst for those things. YouTube H? No way, dude. When did you graduate? What'd you study? Econ? Oh, nice, nice. Was economics part of the business school? Was I over at Bauer? Where were your classes at? And when did you graduate? Because I graduated in 05, so I've been up to U of H lately just to go to the library. And that school has changed so much, man. They've gotten so much money since they got so we're getting like a lot of research grants and stuff. So now there's like parking garages, and the school is so nice now. I wish I would. I mean, I'm glad I went to school when I did, but I actually went to the school and I spoke at a symposium at U of H, like maybe 2 or 3 months back. So I went. It was at the business school, so I was invited to come as an entrepreneurial speaker for some business class, entrepreneur class, and I went there, and it is just so different. Even the last year is crazy. Oh, we're at AH or AA. Yeah, so like I had a lot of my classes there, right up in that little U-shape area, right at the front. Cause that my chemi classes were all at Fleming, and I had some AH and PGH classes in my freshman year, sophomore year. There's a lot of construction going on for 5 years. Oh yeah, man, it's been nuts. Hey, Pat, I'm going to ask you one question and one question alone. How did I win a trading competition that lasted for a month? How after 1,500 trades, I had 80% win rate in a month? Just want to ask you that question. Are you saying it's luck? I want you to tell me what you think. Do you think it was luck? That's all I want to know. Was it luck? No, how did I win? It's different than getting in the top 10. Like, how do you win, right? Was it luck? No, I'm asking you, how did I win? Did I get lucky? Is that what you're saying? I just want to know what you're saying. Because you're saying I have zero skill. So who in that competition had skill? That's what I'm curious about. So according to you, nobody had skill, right? But I'm just asking, you think I was just lucky? That's what I want to know. I'm very curious as to the thought process of some people. Some people just think everyone's bad and they're good. This person wants to tell you they're good. So, but I just want to know, do you think I just got lucky? Variance. No, I don't understand. But so you tell me, give me like a one sentence in plain English. Yeah, I'm an idiot. So in plain English, how did I win a trading contest? I just want to know. Yeah, I don't know what he's talking about. So I just want to know how I won. It was either luck or skill. There's only one of the two it could be. If it's luck, just tell me you think it's luck. I just want to know what you think. Just be honest. It's okay. We're gonna like, mute you forever, and the mods are gonna mute you forever. Every time you speak up, they're gonna mute you. But I'm gonna say, before you go, I just want to know what you think. Was it just luck? I just want to know. No, I'm saying, but what does it tell you? Was it luck? That's all I want to know. Or was it some skill? Was there some skill or was it mostly luck? Just tell me. On a scale of 0 to 100, how much skill do you think it is? Just in your opinion. You guys are so funny. Was there some skill involved or was it just zero skill? It was a little skill, but mainly luck. Yeah, that's everyone in trading. Thank you. I'm now having the last word, and that's everyone in trading. There's a little skill and a lot of luck. That is trading. Welcome to trading. All right, guys blocked. That's it, and that's really what trading is. We all have some skill, but mostly it's luck. So that's what he said. Let's roll the dice. Yeah. So that's trading, you guys. But at least he said I had some skill, which is good. So at least that's good to know. Thank you, Pat. I appreciate pat on the back. Pat, you're so sweet, buddy. Anyways. So, yeah, so our tools predict high volume, and that's what it is. So if you guys want me to prove it, here's how I'm going to prove it. You can't prove it any better. I want everyone here, type 10 random tickers. 10 random tickers. And I'll show you high volume. Just 10 random equity stickers, whatever you guys want to do. Bob it. Okay, ready? Anytime you touch hedge pressure, bull zone bottoms, monthly hedge pressure, bear zone top, you will see high volume. There's the high volume through the bull zone bottom break. There's the high volume through the hedge pressure break. Right there and there. Okay, what's next? Like I said, 10 random tickers. I will produce the highest volume. These indicators are printed at 9:30 a time. It's just a volume map of where volume will be. It is never wrong. NVIDIA didn't touch anything, so it doesn't qualify. Right? Riot, when you touch hedge pressure, it is high volume. I'm going to convince you all. At 9:30, we print these here, and they are 100% accurate. They are never wrong. Never wrong. And you can prove it by just looking at it yourself. As a matter of fact, to shut Patrick up, I'll do 50 if you guys want. Like random tickers. Anytime you touch hedge pressure or bull zone, there's high volume. That's it. So finding where volume is very important to the market. A break to hedge pressure that starts moving higher is a delta squeeze. And you see there's pressure shown right here that above blue, it's pushing higher. So I can see where the flow path is and where the volume is going to be. It doesn't mean that I can predict the market. We're honest about the market being random. But what understanding what the flow path is knowing where volume can be. Volume here on the hedge break is higher than the opening volume. Tap on bull zone is high volume. Are you convinced yet? Okay, let's keep going. Now, subsequent taps still have some volume, but the hedging's already been done, so it deteriorates as the day goes by. It can still be high volume, but the magnitude can be different as these people already flipped to the other side. They're not going to do it a second time. But as you see, the first tap is always matters. And you want to be first to the trade. That's really what's important. Tesla, as you touch hedge pressure, high volume. Any questions? And then subsequent bear zone, bull zone taps or additional high volume spikes. Okay. Shall we continue? Upstart. Upstart. What does Upstart do? Produces high volume. I love that right there. Higher volume than normal. Keep going. GVO. We don't have MSTR on our list. Somehow it doesn't pull data. And I don't know why, but we need to modify our list to pull more data. Penny stocks typically don't have options, so they don't have a liquidity map. Unfortunately, we won't have something that doesn't have options. SoFi. Okay. Going down the list. SoFi. You can't argue with the high volume at monthly hedge pressure. Let's continue. I'm just going down the list. UXY, are you convinced yet? Are you convinced yet? Are you convinced yet? It is never wrong. Never wrong at showing high volume. Bear zone top, there's high volume. Bull zone bottom, monthly hedge pressure, there's high volume. Okay? Never fails. It is a paradigm shift for traders. It is a revolution, and now it's a third kind of analysis. But the best part about it is that we take the premise that the stock market is random and you can't predict it. Instead, we say you can predict volume with options, which I never fail to do every single time. So far, everyone type in chat. Do you need more convincing or do I need to keep going? It's a whole, there's so much shit out there. I appreciate people that are skeptical, but you throw as many wrenches as you can. Open and close are also high volume spikes as well. The highest volume at hedge pressure. Are you convinced? Timmy, I'm going to come over to your house with the water balloons at you. You need to stop that right now. Robinhood. Are you guys convinced that we have something that shows you where volume will be? That's all I want to tell you. Does everyone type if you need, are you convinced or you need more convincing? There's the volume spike as you press towards hedge pressure. Okay. I can show you more, but here's the hedge pressure bounce here. There's the volume. There's the hedge pressure bounce here. There's the volume. There's the opening trade. There's the volume. Do you guys need more convincing or are you good? So the idea is if you can find volume, what it does is it allows you to eliminate everything from mattering on the rest of the day. If I'm trying to make a trade in Robinhood, 40, I can't prove that traders are going to be here. I can prove that there's traders here. And if Robinhood falls to this blue and the flow path is gamma or delta positive from there, then I'm willing to take a bet long off of blue to follow the potential flow path from options. It's just basic options math. Anyone that understands Black-Scholes, which our troll buddy here doesn't, Black-Scholes, you can see the equation and say, I can predict volume from this equation. I can. I'm a math expert. That equation tells you the risk involved in all the options. Anybody that sells an option, and that option goes in the money, right? They owe you 100 shares if you just push a button. So they're liable for an implied 100 share purchase they have to buy at some point. They either bought it or they bought some of it or they bought all of it. With an appropriate hedging model, you can determine how much pressure needs to be applied. If the sum of all these dealer options are in the money, you know somebody's going to buy 50,000 shares, 100,000 shares, just to balance that risk out. And so it's just basic like understanding of the math of Black-Scholes, and that's it. So everyone here, just really quick, can you type in chat, are you convinced or do you need more convincing that we can predict volume? Like I said, throw me random tickers. It hasn't not shown a volume increase. The magnitude is random, right? But when you get to these levels, you can clearly see activity here. Are you convinced? So the idea is that stock market's random. Throw that in your pipe and smoke it. Predicting the market with indicators, random, you're going to fail. Predicting the market, fail. Which direction is going to go? Fail. But if I'm betting on a direction, why would I bet anywhere except for where traders are going to be? People use VWAPs all the time to tell you the volume weighted average price is support. Well, how about having volume like a VWAP except derived from options? It's like looking at one side of a coin and then looking at the other side of the coin. It's a whole different layer to the market that you never looked at before. So if you add our tools to your VWAP, you're going to start getting some of the strongest pivots you can find because this is where volume is going to be. They only work, so we don't have anything for Forex. Wish we did, but anything that has options we can do. So that's basically it. Do I know the percentage of daily retail volume in the S&P? I don't. I do not know that. I didn't hear your question. What's the monthly volume of the S&P or NASDAQ? These are useless things to care about. These things don't matter. Hey, Casey, where did you learn this from? Whatever you're teaching me, did you learn this? Are you the guy? Hey, are you the same guy on a fake account? I just want to ask you that question. Are you the same guy that the mods just banned? How do I trade futures? So very simple. So I watch my futures chart. I have certain pivots that I use in futures. I usually trust people that say LMAO when they talk. So I play enough Call of Duty, by the way. Anybody here plays Call of Duty? I'm going to grind out Iridescent this weekend if you guys want to play with me. But I play enough Call of Duty to know when someone's 10 years old. So by the way they talk. CS 1.6, Adrian, let's go, baby. Oh, okay, so I'm a 1.6er myself. And in high school, let me tell you guys a fun story. In high school, okay, so I went to high school in the 90s, right? And so in the 90s, something called the internet became huge, right? Everyone's using the internet, and every school got wired for the internet. Before our school had a T1 line, which was, high-speed internet at the time, when everyone else was at dial-up. And all the computers were networked together. And we were all in the programming class, like Comp Sci AP. Me and all my Comp Sci buddies, we used to go in there at lunch. And we used to play Quake, and we played Counter-Strike. So the neat thing was that our joke was that we called it Quake AP. That was the course. We had a special class we took at lunch called Quake Advanced Placement. So all the Comp Sci kids would go to Quake AP, and we would all squat up and play on the LAN, CS and Quake. So Columbine happened, if you guys remember, or maybe not remember. Columbine was a very tragic school shooting that took place in Colorado. And Columbine happened in the 90s. And schools around the world changed that very instant. Like, schools went on lockdown. Our schools started enforcing uniforms like a year later, putting metal detectors up, police everywhere. Schools became locked down in America after Columbine. And so you couldn't do shit. Like, you couldn't leave campus anymore. We used to leave campus and go to Taco Bell. You couldn't do anything. You couldn't go to the classrooms. You had to stay in the common area. The cops could watch you. I mean, it's pretty crazy. So my friends and I got special permission from the principal because we were like, we have to go to Comp Sci to practice for the AP. And she goes, no, you guys can practice in your own time. Nobody goes into the thing unless you have official sanctioned UIL competition to practice for. Because we were like, but the cheerleaders get to go to the gym and they were like, well, yeah, but they're practicing for UIL. So they have special permission from the coach to go to the classroom or go to the gym or go to the whatever. And we're like, well, can we can we do this because we're competing and other things. She's like, no, you can't. So what we did was we invented a fake chess club in high school that we need to practice for at lunchtime on the computers to compete in UIL and chess at school so that we can go play Counter-Strike and Quake at lunch. So like we even got a budget to go buy like chess software and chess boards and stuff. And the funny thing was we started a fake chess club. It's my claim to fame in high school so that we can go play Counter-Strike and Quake and at lunch. And when the funny end of that story is that whenever it came time to be in the yearbook, none of us actually wanted to be in the picture of the chess club because we thought it was too nerdy. And they're like, well, we need a yearbook picture for the chess club. None of us wanted to be in it. So I got on, because I was captain of the math club, I got all my friends in the math club to stand in to pretend they were in the chess club. These are the kind of shenanigans that I got into in high school. I was kind of like Zach Morris, if you guys watched Saved by the Bell. I was always getting the shenanigans that would make the principal roll her eyes. So that was, so speaking of Counter-Strike players, yeah. Did you ever start a fake chess club so that you can go play? And again, networked LAN computers was like such an addictive thing. You and your friends could compete against each other. You couldn't really do it that well in dial-up, so it was actually kind of fun. That's what we did. Travis, nobody's here to have you, like, if you want to teach people, I'll tell you what I tell everybody. You're it's like, okay, an example is this, and I'll just tell you something about courtesy, right? Here's 2 pieces of courtesy. Number 1, I'm throwing a party, right? I'm throwing a party. Everyone here came to my party. They didn't go to your party. They came to my party. They're all here having a good time, and you're the guy at 11 o'clock telling us to turn down the music so the cops don't come. So nobody here likes you because you're giving them a bad time. So let's start there. Since you're an expert at math, I'm going to do this. I'm going to draw a pie chart about the amount of people that don't like you, okay? This is about 99.9% of the people here don't like you because you're asking them to turn on the music. You're interrupting their party. They're all over here trying to flirt with chicks, get numbers, put their Mac on, get their Riz on. And you're telling them to turn the music down. So 99% of the people don't like you. The 0.01%, me, I actually like you. But the thing is I'm trying to do my job, and you're trying to do I run a steakhouse, and I'm the chef. You're standing in the front telling everybody, guys, eat tacos. Go across the street and eat tacos. And I'm the chef in the back. I'm like, I like this guy. What the fuck is he doing? Like, what? Like, bro, you seem to be a smart guy. Here's what you'll do. I'm the 1% of person that likes you. Go start a YouTube channel. I will be the first person to sub to learn from you. And I'll watch you if you have something to teach. So, but like you're in my restaurant telling people about your tacos, and they already hate you because you're asking them to turn on the music. They certainly don't want to eat your tacos. All you're doing is annoying these people here. So my mods aren't blocking you because you're annoying me. I'm the only person that likes you. But I'm telling you, I like you enough that I'll subscribe to your YouTube channel if you make one, and then we'll be friends. Giveaway is out. Let's go. Who are the winners of the ETF? I'm the one guy that likes you, but the mods, they don't like the complaints from other people. So I'm not blocking you, by the way. The mods do. I don't even tell them to block you. They do it. Well, you're in my restaurant trying to sell ideas. People are trying to eat, right? And you're yelling at them, and they don't like that. All right. TYO Strike, Atomic Trader, and Nix9991. Congratulations, you guys are the winners of the ETF evals. Congrats. You guys get 350K end of day evals for free. Congrats, the drawing is out. APM stock, I don't really do much of the low caps, so I don't have any opinion on it, and it likely doesn't have options. So how do I trade my stuff, as somebody had asked? Well, I'm going to start off at the top. Some of our futures indicators on a back test have these actual percentages. These green bands are printed by the algorithm every single night. So only 4% of days close above the green band, 8% of days close below, and 88% of days close in the middle. This orange monthly hedge pressure, about 90% of days will close on the same side it opened in. Okay, that's number one. So having high probabilities of things happening give me ideas so that I can find pivots. So I'm not longing because 4% of days go up here. Clearly, I'm not trading the long side here. The market here lifted up as I expected it to do. And 88% of days close within these bands. All four of those things are true. The highest probability of this supporting and this resisting, because 88% of days tuck in, is kind of what we're seeing. So I use the statistics of this to help me gauge probabilities where the market should go, just based on backtest. I have a magnitude of rules that tell me when to sit out, so I can maintain high probability when I trade. Do I ever take a trade? All the time. But today in particular is a sit out rule, so I don't take a trade today. I don't always have to trade. You guys are probably used to watching people trade a lot, but you're not used to watching somebody that has a higher win rate, that has more selected process. Well, I could tell you when to buy in the target. Please give me some details. If we don't tell you when to buy. Sorry about that. I'm the CEO of the company that made this trading platform. I'm just live streaming futures trading. So my goal this year in 2025, here's my goal. You ready? My goal is, number one, to take 100K payouts with ETF. My goal in 2025 is to do 100K payouts with Apex. My goal is to be in the top 20 in the leaderboard on Top Step. So I'm going to tackle them one at a time. ETF, this is just total payouts. I built a lot of fat in the account, and I'm going to be taking payouts particularly. I just took 15K last week. I'm going to take 20K today. So I'm 35 towards that goal already. And then I'm going to do Apex and then try to get on leaderboard and Top Step. So that's what I'm going to do on this channel. If you guys stick around all year, you guys can watch that. So that's what we're going to do. So somebody asked if I do take trades on the stream. So on the stream, you guys can watch a whole bunch of different things. In October, I did a trading contest on the stream. I won that. Late November, I got funded by ETF with an live elite account, like a real money funded account. I've been trading that and taking payouts. Oh yeah. Shubham, you can always go back on the channel. I've been streaming for many years. How many accounts I have with ETF? Just one. ETF is a live elite account, so it's not a sim account or a sim funded. It's a live elite. So ETF promoted me to their funded program, which is the rare thing that prop firms do. They give you real money to trade with. So ETF sponsored me as a trader. So they give you one account with money in it. And I'm trading their actual money right now. How many trades per week do I take? I usually make about one to 3 trades a day on average. Some days there's some good scalps that I can get like 5 or 6 of them. But on average, I usually make one really good trade a day, or I'll sit out if the day looks shitty. And when I sit out when the day looks shitty, I mean, look at this today. The market has gone practically nowhere, right? And I told that from the start of the day. So I can see that. I'm not out there trying to risk shit. I can see this from like a mile away, right? I'm still waiting. Can I talk about the dollar? Can you look at DXY? Is there an ETF for any of the dollar pairs? We could do a liquidity map, anything that has an ETF. A futures trading example? What do you mean? That's all I trade is futures on the stream. Every single stream. Am I going to take a trade today? Nope. Nope, not today. Sitting out is a trade. This is one thing you guys don't understand, you fucking gambling degens, you. Sitting out is a trade. It's a choice. It's not lack of a choice. When you make a trade, you have 3 choices, not 2. You can long, you can short, or you can strategically choose. I don't have conviction either way. I'm choosing 0. I'm not being lazy and not doing anything because I don't know. I have a whole layer of facts that go into this. Until you realize that you need a third strategy, trading is when you're going to continue to fail as a trader. One of the best things you can add to your arsenal is a sit out strategy. When certain rules line up, you can detect that your strategy no longer applies, and therefore you can choose to sit out. Sitting out is a strategy. It's a long of 0. It's a short of 0. It's risk of 0. Certain traders have that eye to tell that the market is absolute garbage. Had I done anything today, if I just longed or shorted at the open, the S&P has barely moved 10 points in either direction. It's choppy and weird, and I bet a lot of people chasing both sides lost a lot of money, right? So as a trader, that I can see something for myself, I can tell that there's just nothing good to touch, right? So learning why someone sits out is also learning part of the strategy. So I have things that I look at, A, B, C, D, that I look at that must line up for me to apply the tools I use. And if they don't line up, I don't apply. But that in and of itself is also a strategy. So FYI. Now, again, resilience is still negative on NASDAQ, and the NASDAQ is still squeezing higher, and so is the S&P. Subscribing to our Rocket Blaze screen, you access the levels? Yes, it does. It's all automated, so if you use the platform, you get the tools that come with it. Volatility come back Monday, yeah, probably so. I agree with you, man. So just remember, like, when people are like, are you taking a trade? I am taking a trade of 0. It's a choice. And I know that it's a good choice to do that. And so a good trader is going to have conditions where they apply what they do. For here, this is not where I normally trade. So one of my rules that I have is outside of this green band above here, I don't, since only 4% of days stay up there. I don't long up in here. There's only 4% of days stay up in there. Unless I have a strong pivot to long off of an equity. So as I'm trading futures, looking at NASDAQ, I need to go to my equities chart to see if QQQ gives me evidence of strong pivots. And QQQ by itself has no pivots for me to trade off of to the long side. QQQ is kind of in no man's land. I'd like to see hedge pressures or bull zones or things like that. So up in here, the market is just in a weird spot where I have nothing actionable to trade off of. I can't forecast high volume up here. So I really, unfortunately, my hands are tied. I can't make a trade. So that's part of like my strategy there. Not longing, not shorting, being very cautious on the market. So because another rule I have is that when this ratio is less than half, I will short under that condition only, DD. Less than half. Under that condition. So because I don't have that condition either, my hands are tied that I have no short here and I have no long here. So because of that, I don't have anything to trade off of, and it's good because I have competing signals either way. I don't really have much to go off of today. That's it. So there's only, so I would tell you that's really, number one, don't copy anybody's trades on the internet. That's weird. Number two, I can't sanction and allow anyone to do that. So please don't copy the trades. Number three, there's normally a 1 minute delay on the stream so that people can't do that because that's a silly thing to do. If you're wasting money following what some random guy on the internet's doing, may God help you in your life. I pray for you. Yeah, the platform has tools for every single futures contract. DD bands, risk intervals, they all have it. And if there's a corresponding ETF that tracks it, like CL is going to have USO, and gold futures, GC is going to have like GLD. You can use the equities world to get extra clues about the futures world. But just, we only have, in here, we have US markets. So we have CME Group, NYMEX, COMEX, things like that. Like I said, I hate seeing the markets crash. It's good to see the markets survive. Like I said, I'm like, markets on thin ice, fingers are crossed that we don't collapse. The same reason now is because resilience is negative on NASDAQ. That NASDAQ wants to fill its gap. That's the problem. So it doesn't mean that it will. It just means that it can. So I'm on the caution here. Like markets on thin ice. Like NASDAQ is trying to fill its gap here. It's very rare. Additionally, with this flow path, now the stocks are starting to make a little bit of oomph, which is kind of like a delayed effect right here. But the caution was through here, was that the resilience was negative, and therefore NASDAQ has a high probability of this move happening right here. So that was the caution I had. Is level 2 or 3 trade data useful at all? I particularly don't think it's useful. But doesn't mean it's not useful to others. For me, it's not used in my strategy. The level 2 data is too rich with noise to really provide any kind of what's it called? Like to provide any kind of like useful data to your eyes. It moves too quick and moves around too quick. It's really hard to say that the level 2 is at all useful. But that's just my opinion, you know. Some people find it useful. Yeah, so normally you don't see me make trades when we gap up or move up outside of these bands anyways. So it's just normally sometimes just sit out, be steady. I still don't trust it. So we ran up on looks like we have 59.75 tap on the S&P. This is good. It's good to see the market trying to stabilize. I like that. I don't hate that idea. Like I said, I hate the idea of markets crashing. When I get the sign, I kind of stay away. It could still, like I said, market's looking a little healthier now. Stocks are starting to recover. As you see, there's a lot of stock movement here. We're starting to see the recovery pretty well right here, which is good. The shift, let's check the change of here, probably a little bit better. Yeah, market stocks have started to recover. Resilience is starting to show that evidence of the stocks recovery, which is good. It's always a good sign. Like I said, something about today is good. It's good to see a transitional phase back to the bull side. I'm still not eager to be part of this market, though. Like I said, I still don't feel eager. So the caution only comes with this white indicator being less than 0. The caution is now gone, which is good. So in this particular case, the Nasdaq is starting to pull through. And so some stocks, like you can pull them, I think Apple was one of the weaker ones today. Apple's starting to pull through, right? So Apple making its way through just here is tilting the market the other way. Thoughts on Tesla puts? I don't trade options. I don't usually short markets when they show signs of being bullishness either. So I don't. I do feel that the market is looking for an excuse to be bullish today, which is good. I've been hoping for a nice little recovery. I don't feel with the monthly maps the way they are that the market's done selling off. It just doesn't have that. Next week, this is all still bearish unless something changes drastically. So the maps are structured with bear resistance all through here. The QQQ is extremely volatile. So unfortunately for us, as traders, this evidence of future volatility, I don't trust a lot of moves right now. The structure of the market is still in a very weird spot. And if this is the big update that can reverse the market, that'd be great. We had signs that the stocks are doing so hot. I'd love nothing more to see this market go back to being bullish. That's for sure. MBT is an entry example. I don't think we don't have data for MBT. So I don't have an example for that one. All right, you guys, for winning the contest, I'm going to send you guys a message in a little bit with the codes. Appreciate you guys competing, being here every single day. We do normally get off the stream at about noon Eastern. We've been streaming a little longer lately, but today we're going to get out of here earlier. It's a Friday. I'm not making any trades, so we're just kind of hanging out. And so I'm going to call it earlier. Don't forget, come to Discord. You're new and only watching a few days ago. It makes shorting near the high of the day different than what I went to when I went to long at the low of the day, New Year's Eve. I don't short because of highs of day or lows of day. I don't usually do that kind of trading. I usually short off of structure pivots based on other things that we have here. So because something's high, I don't short. The market tends to be bullish more often than it doesn't. So I don't particularly like to short the market because it's high. Markets are high. I tend to believe bull markets more than I believe bear markets. So I never try to fade a bull market. That's one of the things. A strong bull indicator like this is like, okay, don't fade the market. So the reason I don't try to short off of these pivots or even short at highs is because the market's still stocks are still pretty strong. And while they were weak at the start of the day, they're starting to recover by the middle of the day. So unfortunately, I don't try to always fade markets. I tend to find bull setups and try to jump in on them. Unfortunately, today, there are no good bull setups. There was a possible crash caution that we avoided once the stock started doing slightly better. So to me, it was like, let me just kind of walk away and just watch the market today, which I'm going to do. Yeah. I always cite, like, when markets are selling, I'm always trying to find some kind of dip to buy if it's possible. When markets are rallying, I'm never trying to fade it. Most green candles will stay strong in green. There's no reason to try to fade a good long market unless you have absolute conviction that the market's about to collapse. That's one reason. But and still, like in a technical pivot, bull markets love to stay bullish as much as they can. Today, signs are mixed, and there's really no setup today that's telling me to bear the market. This morning, there was a crash potential that was keeping me from longing the market. And now it looks like all signs of that are off the table, as we talked about that a little bit ago. Nasdaq started to repair itself roughly close to European close down in here. So that's it. All right, guys, when we get out of here, don't forget to head over to the Discord Go talk in the Ask for Help channel. We'll give you guys free access to today's Zoom call. If you were here today, we'll teach you something in the class. We'd love to have you come by. And we'll share with you some of the knowledge we have in finding high volume pivots. Some days don't look good to trade. Doesn't mean I have to go in there and try to force something. So, you know, a good strategy always has applicable rules to go with it. Keep that in mind. Zoom will be at 3:30 Eastern. If you go to the Ask for Help channel and type in the word Zoom, I will give you the link to the Zoom call in our Discord. Scroll up in the chat to find the link to the Discord or go into the description below, and I'll hook you guys up. Come on over to today's Zoom call. Lifetime membership giveaway. It's going to be in January. No, I didn't say I'm doing it today. We're going to do it. Did I say we're going to do it today? I don't think I said that. I thought we said we're going to do it like later in the January, but I'll do it. So hang in there. I'll do it. Okay. I'll do it next week. Did I say Friday? Oh, I did. Okay. We'll do it Monday. If I said it, I'll do it. My bad. Okay. I thought we were doing it the second week of January, but now that was the other contest that we're doing. You're right. So I'll do a lifetime giveaway on Monday then. All right, come back for that. Okay. If you guys are in the monthly membership, I'll do a lifetime giveaway on Monday. Because I guess I did say we would do it today. That's my confusion. My bad. Okay, we'll see you guys on Monday.